Everyone, let's analyze one of our profitable trades. So we had a profit of 32,768 on the 8th of September, expiry day, our most recent expiry day. So as you can see the profit here on Sensible. So this is the Sensible interface that we're looking at, a profit of 32,768 on a capital of 34.77 lakhs. I'll quickly show on my Zerodha orders page as well, just to confirm that this is not Photoshop trading. This is real trades. Everything happened in a single session, and we executed about 55 trades to achieve a total profit of 1% on like 32,768 on a capital of 34.7 lakhs. So we'll analyze how it is done. So here we go. So you can see the whole bunch of trades. Before I go into explaining the individual trades, let me explain a simple options trading strategy. A lot of you might be familiar, called the short straddle strategy. So short straddle strategy is nothing but you sell a call option and a put option, and you have a range in between. And if the market expires within that range, you make a lot of profit. And you modify the short triangle into an iron condor by buying like some other distant call option and a put option that are further away, just to reduce the margin requirements and also to limit the loss. So here you can see that the max loss is 19,000 and the funds needed is 61,000. So if I untick the buying orders, so here you can then see the max loss has changed to unlimited and the funds needed has also doubled. So this is one basic concept. So keep this in mind, and then we'll look at all the trades that we made today. And we look at how we obtain the profits. So let me go to the Zerodha orders page and we look at the first couple of orders for the day. So you notice, we have two buy orders at the beginning. So these are basically trades which I continued over from Wednesday. So one of those is a 17,200 put option and another is 17,950 call option. So let me just have a quick diagram for you. So this is similar to the diagram that you saw on Sensible, just to explain the concepts. So let me put 17,200 put option on this side, and we'll add 17,950 call option on the side. So we sell the options to enter into the trade and we buy it to close the trade. So we have closed the trade at the beginning of the when the market opened, and we'll see what profit and that has got us. Going back, so let's look at 17,950 call option has given us a loss of minus 1,400, and 17,200 put option, we can see it here. 17,200 put option has given us a profit of 4,400. Let's move on to the next order. So a loss of 1,400 and a profit of 4,400. So we have a net profit of about 2,000 rupees. So we have a net profit of 2,000 rupees. So next up, you can see that we placed in a 919, we placed one buy order. So basically we are constructing an iron condor. So we bought 18,250 call option and we sold 17,950 call option. So we bought it for 0.7 and we sold this for 2.15. Similarly, in the next couple of minutes, so basically in the same adjustment, around 9:50, and the next minute we sold the 16,900 put option. So we bought the 16,900 put option to for hedging, and then we sold 17,500 put option. Uh, we shorted the 17,500 put option for a premium of 6.4, and the other premium was at 2.15. So let me go to the diagram and add these values to make it visually clear for you. So we next values which we entered in were 17,500 put option, and we entered 17,950 call option at around 9:20. So this is around 9:20 a.m. Similarly, we bought 18,250 call option. So basically, so this comes here, 18,250 call option, and we also bought 16,900 put option. Cool. So we going back to the Zerodha orders page. So we remain in this trade. So basically, we placed all these trades between 9:19 to 9:22, as you can see over here. Then basically within the next 5 minutes, the market was moving up. So we actually panicked and we closed the 17,950 call option at a small loss. So here you can see a premium of 3.25. While selling it, we had sold it for 2.2. So we had a minor loss over here at the 950 call option. And so basically we closed it by buying it twice, buying the sold quantity. So basically we uh, sold twice, 1,800 and 700. We bought 1,600 and 900. So basically we bought 50 lots and we closed the trade at 928 itself for a minor loss. We similarly we also sold off the hedges that we had, and a little bit of panic at that moment. You can see some unnecessary selling, and so you can see at 10:08 we basically we entered into the same trade once again. So you can see that the premium had actually reduced to 2.7. So if we had not sold it at a loss, we would have actually been in profit already. But you never know the direction of the market, and it is recommended to be defensive. And we also closed out the 17,500 put option. So basically we entered in the put option at 6.15 and we later closed it for 5.85. So that then we made a more aggressive move. So we moved into the 550 put option. So let me go back to the drawing board to make to visualize things for you. So we moved from here. So we moved, next move that we made was 17,550 put option. So this is called adjustments. So we do this to increase the profits. So this one we rebought again at 10 around 10 8 a.m. right? So we re-enter the trade once again at both at 9:20 a.m. and also at 10:08 a.m. Cool. So we entered into these trades, and you can see that we remained in this. So basically we because we can only order 36 lots at a time on Sensible Zerodha interface. I'm not sure whether it applies in other places. But because of that, so we are basically breaking down all our orders into two batches because of the number of lots that we are buying, and we bought it. And the next adjustment is happening at about 10:40. So let's go back to the Zerodha interface. Yeah. So we see like all these trades have been done from 10:08 to 10:12. You can see basically the 550 call option put options being bought, the 950 call option being shorted, and we remain in the position till the next adjustment comes at 10:40. Meanwhile, let's quickly look at how much profits these bought us. So if you look at the 550 put option, so that gave us maximum profit for the day at 18,000 rupees. And the other value, this 950 call option, let me find that for you. We actually are in a loss in the 950 call option. I'll explain the adjustment, but we had a huge profit in the 550 put option trade that we entered. Going back, yeah, so now let's look at the 1040 adjustment. 1040 adjustment. So basically what we are doing here is we are closing out the 950 call option once again at a very quick close. But the reason we did it was we wanted to be a little bit more aggressive and get into a like a fully on the call option side. We wanted to be unidirectional. So at 1040, we suspected the market continued to go up. So we removed the straddle. So, so this is what we did at 1050. At 1050, we closed out this leg of the straddle, complete leg we closed out, and we added more on the put option side at 1050 or 1045. We added more on the put option side, and we completely closed the call option side of the straddle. So this was a very profitable move if you look at the direction of the market on the day. But I'll show it over here. So this is also one of the reasons why the 550 put option profit was 18,000 rupees. So we made this adjustment and we stuck to this for some time. And another thing that we did was, on top of this, we bought another we added the 17,000. My bad. We added the 17,050 put option. When we closed the call option, we added more hedging on the put option side. The next adjustment we make at 12:57. The next adjustment we make at 12:57. If you look at Zerodha, 12:57 to 1 o'clock. So we make a couple of trades. So basically, what we do is we enter once again into the call option side, and this time we enter a little bit more aggressively. As you can see, we are getting close and we sold the 17,850 call option. Going to the diagram. So what we do is we enter once again, and this time let me choose a new color. So we enter at 17,850 call option at 12:55. So we entered it and we added the hedges. So I'll leave it for now. So once we added this, let me go on to the Zerodha interface. The next set of adjustments we make only at 2:30. So 2:30, at 2:30 you can see we basically close off the put option and we close off the 17,850 call option. So let's see what profits we have. So basically this is the profit that we saw. So this is the profit. We realized this profit at 2:30 p.m. Let's look at the 850 and see how much profit that gave us. So that has given us a profit at 2:30 p.m. of 3,500 rupees. So we closed these two legs, and then we made another new entry, the final entry for the day. So we entered into the 17,600 call option, and we actually took a conservative call option once again. So basically we moved one step back. Again, I'll explain this in the diagram. On the put option side, so basically we came a little closer. So we bought, so we shorted this. So we shorted the 17,600. So let me choose black color. So we moved another 50 points, and we came all the way to the 17,600 at 2 p.m., 2:30 p.m., 2:25, let me put it. On the call option side, we went back to the 900 call option. And finally, we closed all these positions at 320. So let's see what these new values have given us. So 17,600 put option gives us a profit of 2,000 rupees, and 17,900 call option, 17,900 call option is over here. So that has given us a profit of 8,000, almost 8,400 rupees or 8,500 rupees, right? So apart from this, you would see a couple of other trades, like very minor trades. So basically, I was experimenting with another strategy called the straddle strategy. Uh, but the bulk of the profits that you see, 18,000 rupees, 2,000 rupees, and 8,000 rupees, and 3,500 rupees. If we once we add everything up, so let me choose this. Yeah, once I choose everything, yeah, and we get a profit of 32,768, which is how we made that entire money for the day. So this is the secret. So wish all of you good success. So once again, we trade very transparently every Thursday. We do the same strategy. We do iron condors and short straddles every Thursday, live, completely transparent. So you can join us. By the way, so we are not SEBI authorized research analysts. So this video is for your educational purposes only, and all live streams are for educational purposes only. But you might as well, trade along with us. And weekly, as you can see, our playlist in the description below. You can see consistently we make profits without fail every single Thursday. So join us, subscribe to this channel, Stockmans, and hit the notification bell to get notified. And definitely watch this channel every Thursday for updates. So wish all of you the best. Happy trading, happy investing.